So Uber, the company and the stock has been under a lot of pressure in the last year and a half. Ever since the pandemic in 2020, the core part of their business, what they started off with, which is rides, absolutely suffered. I mean, let's be real. Who wants to take a ride during a pandemic? You know, we're locked down, we're at home, we have nowhere to go. Who's gonna take rides? On top of that, who's gonna drive for Uber during a pandemic? People are conscious, you know, they don't want someone in their car who's not being careful, not vaccinated, all that. At the time, there was no option for vaccination. So there was just a whole lot of, drivers not wanting to drive, consumers not wanting to take rides. The need for Uber's ride service really took a hard hit. But this gave way for another segment of their business to really pick up steam and become the monster that it is today. That's of course Uber Eats. So I actually kind of see the Eats story similar to Disney's story with Disney Plus. So Disney's story is, they're a core company that focuses on entertainment, their amusement parks, they have stakes in ESPN, with sports, all that kind of stuff, right? And last year, when everything locked down, all those segments were just destroyed, right? There was no need for sports because athletes were at home. Parks, of course, were closed. There were no movies being filmed. Everything was just standstill. But there was one saving grace for them, which was Disney Plus, and that was the part of the business that just shined and pushed them through the darkest days. Similar with Uber, Eats is their Disney Plus, and it pushed them through their darkest days, and will probably be a major factor for this company in terms of its success going forward. Now, a good business will, take what it's learned from these tough times, adapt, and come out stronger. And I believe that Uber did do that. In fact, the big news today is that their CEO actually did say that the company is very close to profitability. In fact, we are going to see EBITDA profitability ahead of schedule. Now, for years we've been hearing the story from Uber, profitability is coming, just wait, just hang on tight, we're going to become profitable soon, it's going to be next year, it's going to be next year, it's going to be next year. They just kept kicking the can down the road, and then, everything happened in 2020 and things got pushed even further. So it's not really been the easiest time for Uber as a business here to convince investors, hey, look, we're doing things right, we're going to become profitable, invest in us. Investors were just not convinced. And you can see this by the stock price. It's slowly grinded lower, it's sold off. Stock is down nearly 40% off of its highs earlier this year, and it really had no signs of turning around. And then we had DoorDash. They IPO'd recently, all the hype was on them, all the money started flowing to them. And we saw this. DoorDash actually surpassed Uber recently in market cap, which to me made absolutely no sense at all and showed how the market really disliked Uber and they just poured whatever they wanted to into Uber into DoorDash instead here in the short term. But today, guys, with the confirmation of profitability literally around the corner, investors are excited again and investors are back. We saw a strong double-digit gain on the stock today, and this is despite the broader market seeing a ton of weakness. It kind of sucks that, Uber's shining here during a market downturn because sooner or later it's probably going to get pulled down as well as everything else gets pulled down. But, look at the positive side, I guess. On a massively red day, Uber, if you have a good portion to that in your portfolio, helped alleviate things. So let's talk a little bit more specifically about what the CEO actually said here, which got investors excited. Well, it all comes down to their EBITDA, which is their earnings before, interest, tax, depreciation, assets. And for Q3, it looks like this will come in at negative 25 million to 25 million. So they're essentially saying that they may eke out a small profit this quarter, but then next quarter, Q4, the range is actually expected to be between 0 to 100 million. So this pretty much confirms that management of Uber believes that they're going to be profitable before the end of this year. And this is important because if you look at Uber historically, they have had a very tough time returning positive EBITDA, with Eats being a big drag on the business, but it seems like they've streamlined things now. 2020 probably helped them get more efficient, and this trend is set to reverse as early as this quarter. So as an Uber investor, full disclosure, I do own Uber stock. I've held on to this for a little while now. I've gone through ups and downs. At one point, I believe I was up over 100% on this position. Now, of course, it's nowhere near that. but I'm still up in my position. I'm still gonna hold it for the long term. And I actually did purchase some call options, leaps, for 2023. I bought it a few months ago, and those are down pretty massively right now. But after today, it is starting to recover, and I have no doubt that by 2023, Uber is going to be much higher than what my strike prices are. So now you might be wondering why I'm so confident, why I'm so excited in the future. So let's look at a few metrics here, which kind of tells me that this stock is going higher. Uber is one of the few businesses expected to grow over 40% next year, which puts it in a category of super high growth companies. A lot of companies have seen massive growth this year, and they've been rewarded for that, but then they're expected to slow down quite significantly next year. One example is Apple. Huge growth this year, but investors are expecting, tiny growth next year. So Uber looks good here with strong growth next year, and now with profitability also improving, it kind of signals to investors, hey, come in. We've proven that we are going to be profitable, and you can kind of put your money in here much more safely now and expect good returns over the long term. This essentially reduces the risk for Wall Street to invest in this business, and I think we've seen the money start to flow in here after today. And in recent months, we've seen hedge funds buying up Uber stock a lot here because they most likely accounted for this EBITDA profitability here. And after today's move, it looks like, a lot of them were on board, but a lot of them were not on board. So they're trying to flood in money today and trying to get a position built right here. Even after today's 11% run-up move, overall consensus from analysts sees around a 50% upside in the stock with nearly a $70 price target in the next 12 months alone. So here we have a positive outlook for the business, Wall Street money getting behind the stock, improving fundamentals, with most importantly, positive EBITDA coming very soon. Everything's trending in the right direction here for Uber, and this should help move the stock higher. From a technical perspective, watch for a break of that 50 moving average on the weekly, which once cleared should send us even higher in quick order. We also want to see volume stay relatively strong here during this time because this would imply that buying pressure is real, and that should help sustain this upward move. Now guys, if you want to learn more about my thesis on Uber, more in depth with the business, looking at the numbers, the metrics, the actual fundamentals, and why I like this company, I've made videos on that. I'll link them in the description down below, so check that out. But either way, if you enjoyed this video, you want to see more like this, let me know in the comments down below. Thank you so much for your support. Thank you for watching. Don't forget to invest positively, and I'll see you in the next one.